Today we're talking about a topic that's important for any business owner accepting card payments: reviewing your merchant statement. Although every merchant statement is different, we're going to give you some useful tips to help you make sense of yours, focusing on key components commonly found in merchant statements across the board. Let's get started. So what exactly is a merchant statement? Picture it as a detailed report of your business's card transactions. It's a monthly statement provided by your payment processor that breaks down all transactions, fees, and other important financial information for your business. So why does this matter to you? Understanding your merchant statement can help you identify discrepancies like unusual charges, errors, track your sales trends, and ensure you're not overpaying in fees. It's like a financial health checkup for your business, giving you a clear picture of where you stand. So now let's break down the key components of a merchant statement. Up first is your merchant ID number, or MID for short, and contact information. Your MID is your business's unique identifier. Think of it as your merchant account's lifeline. You'll need it for things like dealing with customer support, monitoring fraud, integrating with e-commerce platforms, and managing sales for your business. Additionally, your contact information, such as your business name, phone number, and email, will be listed at the top of your statement for any inquiries. This information is there to make sure that communications from your merchant account provider will be directed to the right person to resolve any issue. A summary of your processing volume and total fees for the statement period are usually listed at the top or bottom of your statement. This section gives you a snapshot of your account's activity as a whole for the month, including total sales, refunds, chargebacks, and their associated fees. The summary will show a detailed analysis of your total sales volume and the number of transactions taken. It'll also show you the card type and amount processed for each sale. This includes a breakdown of the fees, transaction fees, monthly fees, and any other service charges that apply. Starting with total sales, you'll see the total amount of money generated for the month, which can be a great tool to help you gauge how well you're doing. Next, you'll see your refunds. Refunds are a specific type of transaction where your customer is reimbursed. This could be due to returned merchandise, services not delivered as promised, or plain old customer dissatisfaction. Typically, if you have any refunds, your processing statement will reflect them in your net sales. Daily batches show how much you processed on each day of the month, giving you a detailed view of your sales activity. This is a fantastic tool to help you understand your business's daily finances and identify any unusual patterns. Keep in mind that there can be multiple batches in a single day, so always pay attention to the batch date. Itemized fees are a detailed list of the fees related to your transactions, such as transaction fees, monthly service charges, or incidental fees. Understanding these fees will help you pinpoint exactly where your money is going so that you can control your overall budget and expenses. Lastly, any chargebacks you receive will be listed at the end of the fees section. A chargeback occurs when a customer disputes a charge from your business and asks their card issuer to reverse it. There are several reasons this happens, the most common ones being fraudulent transactions, dissatisfaction with the product or service, or billing errors. Chargebacks can negatively impact your revenue and should be handled right away. These are like financial gremlins. They'll sneak up on you and nibble away your profits, damaging your reputation and ultimately leading to the termination of your merchant account. So make sure to keep track of them in order to identify any potential issues with your products or services. This is key to maintaining a healthy bottom line and a great relationship with your merchant account provider. Now, let's talk about reserves. Reserves are usually added to high-risk merchant accounts to protect processing banks from liability due to their increased level of risk. With reserves, a percentage of your sales are held in a separate, non-interest-bearing account to cover any possible losses from your business. If you have reserve on file, you'll see the amount accrue in the reserve section of your statement so that you can keep tabs on the amount being withheld. Becoming familiar with your merchant statement isn't just about keeping tabs on your finances. It can be a strategic tool for business growth. Understanding it will save you money and allow you to optimize your operations. So let's go over a few reasons why you should check your merchant statement regularly. By fully understanding your current fee structure, you can negotiate more favorable terms with your processor, meaning lower rates or better service options in the future. Many processors implement annual rate increases, and you'll be first notified about this on your merchant statement. Typically, a notice will be included on your statement 2 to 3 months before any increase happens. Keeping an eye on these updates will give you time to prepare and budget accordingly. We get it. No one likes surprises, especially when it comes to costs. However, processors implement these rate increases to accommodate changes in the industry. As time goes on, the price of everything goes up, and merchant services are no exception. Merchant statements can seem like a maze of different fees, so it can be difficult to identify when they increase on your report. You'll want to specifically look out for leasing and equipment fees, compliance and regulatory fees, PCI fees, and monthly access fees to make sure they don't go up. Identifying this information will help you spot any charges that are unusually high or unnecessary, allowing you to question them and seek more cost-effective options. Chargebacks can be a major headache, but regularly keeping tabs on your chargeback ratio from your merchant statement can help you get ahead of potential issues. By monitoring this ratio, you can identify trends or problem areas in your business processes that may lead to chargebacks. Check out our video on chargebacks right here for more info on this. Now, let's dive a little deeper into fees and explore interchange fees and the factors that influence them. Understanding how interchange fees add up is a great way to help you optimize your processing costs and lower fees. And since interchange pricing can seem a little bit overwhelming, I'm going to simplify the process for you. Interchange fees are set up by card networks like Visa and MasterCard and can vary based on things like card type, business type, and the transaction method that's been used. These fees are publicly available and regularly updated by card brand networks. Additionally, certain industries have different interchange fees based on their perceived level of risk and their average transaction size. For instance, accounting firms tend to have lower interchange fees than travel agencies because they're reduced exposure to fraud. Finally, each transaction method used affects the interchange rate. When a card is taken over the phone rather than in person, there's more room for fraud, granting higher fees. Since interchange fees are assigned by card issuing banks, there's unfortunately no way to lower them. However, you can negotiate a lower discount rate, which is the percentage added to each transaction by your payment processor. By getting in the habit of reviewing your merchant statement, you'll have the power to identify discrepancies, negotiate better terms, and stay ahead of cash flow issues for your business. And we get it, understanding your statement can be confusing. So if you'd like someone to walk you through your processing statement step by step, reach out to us today for a free processing statement analysis. If you've enjoyed this video, don't forget to like, comment, share, and subscribe. Until next time, happy processing.